Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia CEO Jensen Huang makes a big forecast for the AI build-out.
Right here where I stand, I see through 2027 at least $1 trillion.
Plus, we discussed the AI and M&A landscape with the CEO of IBM, hot off the company's own GTC announcement.
And Gecko Robotics works to deploy its AI-powered robots to assess the condition and readiness of the U.S. Navy's warships.
But first, we turn our attention to, well, once again, a market that is focused on geopolitics, on war, but also on the eve of the Federal Reserve rate decision. We're currently seeing some buying of stocks. In fact, 89 of these 100 names are in the green for the Nasdaq 100. We're up for a second straight day. We're up 0.8%. And we're seeing a little bit more of a risk-on attitude, Ed, and you're going to dig into, well, perhaps one of the catalysts.
As I stand here right now, Nvidia shares are completely flat in the session, but they've been on a roller coaster across two sessions. Late Monday, when Jensen Huang had his keynote, you could see the big spike, almost 5% in the session, of what was extended visibility into the demand for Nvidia's products. Here's what he said.
Right here where I stand, I see through 2027 at least $1 trillion. $1 trillion is an enormous amount of infrastructure. That infrastructure investment you could make on Nvidia, you could make with complete confidence. We have now proven that.
Let's get right into it with Bloomberg's equities reporter, Ryan Vlaselica. I mean, you've summarized what the sell-side's reaction has been to that $1 trillion number. It's mixed, but on the whole, bullish. What are you seeing?
Yeah, absolutely. I would say people are, in general, pretty positive on this target. It really speaks to how much visibility Nvidia has going forward. It really speaks to how they expect all this AI infrastructure spending to remain pretty durable, which is something that has come under question this year and led to a lot of volatility across the tech space. However, I think it also just speaks to just a certain amount of uncertainty and a certain amount of hesitancy when it comes to this company and this stock. Now, we wrote about this earlier this week, but Nvidia has been stuck in a pretty tight trading range for months. It's been unable to break out, even on the back of strong earnings, even on the back of yesterday's announcement. We did see a brief spike, but then as people sort of dissected the target, it came back down again. So I think there's still a lot of skepticism out there. Now, I would flag that it is hosting an analyst Q&A. I think it starts in about an hour. That is something I think people are going to be really drilling into this $1 trillion number, trying to understand it, and maybe that's something that will spur a little bit more gaining, but so far it seems like there's been nothing that has been able to lift the stock.
Yeah, because of those analysts who are going to be tuning in, 75 say buy the stock. Only one, as ever, says sell. And look, they see more broadly a price target in the next 12 months of $269, well above where we currently trade, Ryan. So they're still just waiting on some other catalyst?
Yeah, it's hard to know what the catalyst is going to be at this point. They've really talked about their product lineup. They've talked about their growth expectations. The multiple has really come in. It's, I think, one of the cheapest stocks in the Mag 7. There is still a lot of questions about what is growth going to look like, years out. What kind of deceleration could we see? And people are factoring that in. But certainly, when you talk to a lot of people, everybody still likes Nvidia. Everybody still thinks it's a very well-run stock. They don't really see demand drying up anytime soon. But it does seem like there's a certain amount of hesitancy. It's almost like they've built up a tolerance for the kinds of gains that we've seen in quarters past, where they would give some kind of big target and we'd see the stock jump 20%. It's a lot harder to imagine anything like that happening today.
Ryan, what else are you seeing on your desk this morning as it relates to GTC? Like, is there a broader market digestion of the 2.5-hour speech that Jensen Huang gave yesterday?
Yeah, 2.5 hours. I did see a lot of people saying, this could have been a lot shorter, so that was kind of funny. But beyond that, we are seeing a lot of people just digesting this. We saw some moves yesterday in IBM, in optical companies, in Intel. So there are a lot of companies. Like, it hasn't quite been the same way that it was in years past, where they would mention a company and we'd see that stock rally. Everything is a bit more muted right now. People are really trying to understand this, trying to understand where this trade goes from here. And we're not seeing the sort of excitement that we saw really at the onset of the AI era.
Bloomberg's Ryan Veselika with all the technicals on trading this stock. Now let's get you the fundamentals, the market perspective with Daniel Pilling. He's Senior Research Analyst and Portfolio Manager over at Sands Capital. Daniel, I mean, let's talk about the demand for NVIDIA's products. You still see them as insatiable. We've got GPU, CPU, LPU. What drove your optimism from yesterday's speech?
Yes, so I think the proof is in the pudding, I might say. So when we look at sort of the labs and their revenue growth this year to date, it's been massively accelerating, right? So Anthropic's public numbers went from 14 to 19 billion, literally within a few weeks. And I think the crux of what is going on here is that agentic AI is here. It is as viral as Zoom was at the beginning of COVID. And what I mean with that is that once somebody starts using it, it starts doing amazing things. Every colleague will follow over time, and we just don't have enough compute to really satiate this. And this is likely a multi-year process of sort of everybody starting to use agentic AI within their own workflows. We have 1 billion people as knowledge workers, and we maybe have a few million agents as of today. So to me and to us, this feels like sort of the iPhone moment of 2007 and 2008, where everybody will want to buy an iPhone and everybody will want to run an agent, which means the numbers will likely continue to be much, much, much bigger over time.
And Jensen wants to be the infrastructure for that, but also not just the chips, but the operating system that goes with. Talk to us about OpenClaw and how they're developing sort of their own operating system for that and for agentic AI.
Yeah, so it's very interesting. So NVIDIA created the security framework to wrap these open source agents within an enterprise, right? And why do they do that, right? Because an agent will be able to access your calendar, your payment mechanisms, your documents. So it's got to be very, very safe and secure. So this is one of the key bottlenecks that people have to overcome to install agents within the enterprise space. And then, as NVIDIA always does, they sort of create their own markets. So they created this framework called NemoClaw, which means that every enterprise in the world now can implement an agent locally on their devices, which means that this growth can really start to accelerate within the enterprise because the security is there.
Daniel, my Bloomberg terminal tells me Sands Capital has about 20 million NVIDIA shares. Is that right?
Yes, ballpark, yeah.
Let's go back to the number. 2025 through the end of calendar 2026, 5 fiscal quarters, was $500 billion of demand just for Blackwell and Rubin. I think that Bernstein were able to confirm with NVIDIA's CFO that the 1 trillion is also Blackwell and Rubin, including associated networking. But there was a bit that Jensen said in passing right after that sentence, which was, we will be short. In other words, I think they're still massively supply constrained relative to demand. How are you interpreting that?
Yeah, so I would agree. I think there's 2 things we need to see here. One, the hyperscaler revenue growth has to accelerate to get, to basically maybe get the market away from focusing on some sort of peak cycle concern and back to focusing on sort of this growth in tokens that Jensen is talking about. So once we start seeing hyperscalers really re-accelerate because they're buying all these chips, right, I think that concern goes away. And then the second piece is the demand is truly viral, right? So everybody in the world, I think, will start seeing these agents as a massive productivity tool. If your colleagues are 5 to 10 times more productive than you, then you have to implement it as well. And we think the penetration of agents today is within single digits percentages, right? So as we go from single digits to 100%, it's 1 billion people. That means you need so much more capital.
Right. The associated data point with the 1 trillion bar chart was the pie chart that 60% of that demand is still coming from the hyperscalers. It wasn't that long ago that we were very focused on how much NVIDIA diversified away from the hyperscalers. It seems like that hyperscaler portion's just going up.
Yes and no, right? So hyperscalers are by far the biggest purchasers of these things, but there's also the neoclouds, which are investing heavily. And actually also very interesting enough, governments will be able to invest more going forward as well. And NVIDIA is playing a key role in that, right? They're one of the leading open source providers of these models, which means as a government, you can take the open source Nemotron model from NVIDIA, implement it locally. You can buy all the chips from NVIDIA at the same time and sort of run your own local cloud within your country. So I think those 3 will be quite important, but hyperscalers will always be very important in all of this.
Daniel, it's interesting that really where Jensen always tries to lean in is is differentiation, the fact that he's got the right chip for the right workload at the right time, and that's why they started to talk a lot more about inference and grok, for example. But I'm interested about, he usually pushes us forward a little bit more. Yes, we've already actually heard a lot about Vera Rubin. We know a lot about Blackwell, but why not even push us into Feynman more? Why not hear about the next iteration? Because it's like every single year we've got a new architecture coming for us.
Yes, I would actually say what happened yesterday is quite revolutionary. So Nvidia is the first company that will have two different types of chips for inference, so for calling on the AI models to get an answer. There's a new LPU chip, which is super fast. Nobody else has that. And that's combined together with sort of the old sort of the generalized GPUs that they always had in the past. And then he did give an astonishing quote that LPU, or the fast chips, they will be 35 times more performant on a performance per watt basis than anything that was there before, 35 times. So I do think those jumps are just as good, maybe even better than in the past.
Daniel, you clearly have a command of the spec, right? Generation to generation on the chips. I'll take it back to the stock. You know, Caro outlined where the sell side stands on this name. The question for you and for Sands Capital: do you buy more based on what you heard on stage in San Jose?
Yes. So I think this event itself has been very reaffirming of the future, but the entire debate about the stock, I think, will be resolved truly by this. The market is looking at Nvidia as a business that is at peak revenue and peak earnings. We disagree. And the reason why we disagree is everything we discussed before. Agentic AI is exploding in terms of demand. Now, this all will get resolved once the free cash flow and the revenue growth of the buyers of these chips, i.e. that 60% of the hyperscalers, for example, will start growing again. And whenever you start seeing this entire debate will be resolved, because then the market will say, we're going from peak concerns to actually this is a very structural and durable growth trajectory over the next 5 to 10 years. I don't know precisely when this will be solved, but my guess is that we're going to see a significant acceleration in hyperscaler revenue growth within the next 1 or 2 years, because they're buying hundreds of billions of dollars of these chips. And then maybe equally important, the return or the payback periods of these chips is actually improved in the past 12 months because we're completely sold out. So basically, you're buying a GPU and you're getting your money back in record time, which again then leads to the point of the hyperscalers will start seeing more growth, better free cash flow growth, which should translate then hopefully to a positive outcome for Nvidia.
Daniel Pilling from Sands Capital, thank you very much. Now, coming up, Uber's self-driving ambitions get a major boost with a new Nvidia partnership. We've got more on the details next. This is Bloomberg Tech.
Let's check in on the shares of Uber and Lyft right now. In the green, as you'll see, significantly. And that's after both companies announced deepening partnerships with Nvidia, which is currently down 0.3%. Look, Uber says it plans to roll out a global fleet of Nvidia-powered self-driving vehicles across 28 cities by 2028. Lyft, meanwhile, will use Nvidia's AI to strengthen machine learning systems across its operations. For more, Bloomberg's consumer apps and gig economy reporter Natalie Lang joins us now. What's interesting with Uber is that we'd had some big, bold ambitions articulated back in February, was it? And 100,000 cars are going to be on the road in this partnership with Nvidia. But what's the timeline now looking like?
So the updated timeline is that these vehicles will be scaled across 28 cities by 2028. And that will really start in earnest in 2027 in Los Angeles and San Francisco.
I mean, Uber's about a percentage point off having its best day since June of last year. So, like, at first you're like, this is a name check that's driving the stock. But really, it's more updates to an existing partnership. What about Lyft then? I mean, this really is by name association because it's more about internal use.
Yeah, it's about internal use, but part of the release also mentions future possible deployments of NVIDIA-powered vehicles on the Lyft platform, but we don't have a lot of details on the manufacturer partner yet. Whereas for Uber, they have a couple of partnerships already announced, such as Lucid and Nuro vehicles, Wave vehicles with Nissan that will be powered by NVIDIA chips and technology.
I think it sort of goes to what RBC's analyst Brad Erickson was spelling out, that all of this news vindicates perhaps both Uber and Lyft's role as platforms in the AV era. We'd all been worried about competition, but actually they're the ones that are going to bring it all together, right?
Yeah, and this further shows it's not just a demand generation platform. It's not just going to be an app that will allow people to hail a robotaxi. But here we can see that Uber wants to be the fleet partner. It wants to support some remote assistance operations for these fleets that they run themselves with partners as well.
Bloomberg's Natalie Lung across all the movers in the gig economy space after GTC. Thank you. Another deal announced at Nvidia's GTC conference. IBM will collaborate with the chip maker on an open source project aimed to help enterprises use AI at scale. We sat down with IBM CEO Arvind Krishna for more on the deal and on his take about the wider M&A landscape. Listen to this.
I think the regulatory environment is definitely friendlier, where we got this done in just under 4 months, whereas it used to take a lot longer a few years back.
If regulatory environment is friendlier, should you be doing more of it? Should there be more M&A, particularly with some beaten up overall valuations of software companies at the moment?
I'll just say watch the space.
Oh, watch the space. Okay, but where would you want to add on in this moment, Arvind? What would make sense to be adding to your portfolio?
So we're very focused. Hybrid cloud and AI and the intersection. The work we're doing together with Nvidia was a 5 times speed up. So 5 times, not 5%, not a little amount, but 5 times. So there we began to leverage the Nvidia GPUs together with some of their CUDF or software, combining it with our Watson-X data. And the example we used was our client Nestle, where together we managed to get that speed up across their massive amounts of data, and that really is important. In that case, combining some of the technologies we work on also in open source with the Presto data engine, Nvidia, and the example at Nestle, but then we're very excited. We're going to do more work on that and then take it into the market and take it out to hundreds of clients from there.
That was IBM CEO Arvind Krishna. Karen, many more headlines out there.
There is. It's time to talking tech. First up, the UK is ramping up its push into quantum computing, committing more than $1.3 billion over the next 4 years. It's a major bet on a technology increasingly seen as critical to national security, future economic competitiveness. Plus, don't expect memory chip shortages to ease anytime soon. SK Hynix, well, it says that the crunch could last another 4 to 5 years. SK Group chairman, that's Anthony Che, notes that while chip makers have already ramped up capacity, it may not be enough to satisfy demand until around 2030. And Samsung, well, is already pulling back on its Galaxy Z trifold, just 3 months after the launch. Now, the South Korean company plans to halt sales of the nearly $3,000 device in its home market, with the US discontinuation expected to follow it.
Okay, coming up, amid the chaos of the Iran conflict, Bitcoin is emerging as an unlikely oasis for some investors. We have more on that next. This is Bloomberg Tech. One of the world's best-known investors in Nvidia, ARC CEO Cathie Wood, says she's optimistic about the return on investment from frontier AI model providers. She spoke with Bloomberg's Anna Edwards in London. Take a listen.
We are seeing revenue generation exploding from the frontier model providers. Anthropic's annualized revenue run rate, so ARR, went from $9 billion in December to $19 billion today. So annualizing revenue at $19 billion, that's astonishing growth. OpenAI from 20 to 25 billion. The productivity that we are enjoying from these large language models is astonishing, even within our own firm.
Yeah.
I'm even former skeptics that this was going to amount to very much, very New York skepticism. They're blown away by what they can do.
Just to take a detour to geopolitics, because it's become such a dominant market driver, and I wonder how it influences your thinking. We are week 3 of a war that's taking place in the Middle East. Many tech businesses, of course, probably quite insulated from everything that is happening there. But I wonder, what rethinking does it prompt at ARC? What shift in focus or shift in strategy, if any, does this kind of thing prompt?
Yes. Well, of course, it depends how long-term this is. And we are thinking it will be short-term. We do have midterm elections this year and other considerations. But, of course, energy prices going up, any supply shock, to the extent it slows unit growth down, it will slow down the learning curves associated with various technologies. If this is, a month or 2 months, it's not going to have a big impact at all. If this is extended, COVID, we did not understand that the supply shock would reverberate for 3 years,
yes,
and that inflation would take off, and that monetary policy would accommodate the inflation the way it did. We're not in that situation right now. Monetary policy is not accommodating inflation. We're at 4.3% M2 growth on a year-over-year basis. So nothing like the high 20s, low 30s in COVID.
ARC CEO Cathie Wood there alongside Bloomberg's Anna Edwards. And look, let's talk more about the war in Iran, because it is fueling volatility across global markets. But cryptocurrencies are actually emerging as an unexpected bright spot of late. Bitcoin and its peers have rallied during these times of geopolitical stress. For more, Bloomberg cross-asset reporter Isabel Lee joins us. Look, on the day, a little bit of pullback. But over the last few weeks, we've actually finally seen some more buying or less bearishness?
I think it's both. Bitcoin has been resilient. It's now on a 6-week high. And unlike its other asset classes, gold, equities, or even other asset classes, it's seen a relative calm. The volatility of Bitcoin has been kind of flat. And really, you can point to it to many things. Maybe it's institutional buying, or maybe it's just a narrative. Although what a lot of my analysts are saying, at least when they talk to me, it's really more institutions, especially corporate treasuries. For every fall, they absorb it and they buy more of the supply.
There is a technical, or I guess a better phrase for it, transactional part of this story, which you write about. The rally is driven in part by traders unwinding their options bets. Could you explain that quickly, Isabel?
This is the thing with Bitcoin. It's interesting because more than the sentiment, it's really all about this mechanic. So we have traders unwinding their options bets. Those that bet that Bitcoin will continue to fall. And so when they unwind that, as traders close out their negative positions, Bitcoin rallies. And we have about $1.5 billion of Bitcoin puts clustered around the 60,000 level. And now we're around 75,000 level, which is, again, a 6-month high, so which is really impressive. And there are 1.3 billion of calls at 75,000. So that's why you see Bitcoin rally. But again, it's more about a narrative. We're moving beyond that. Now it's about mechanics. I mean, you look at ETF flows, right. $1.5 billion have flown month to date. So that's really a sign of confidence. Ed.
Bloomberg's Isabel Lee. Thank you. Kara, what are you looking at?
Well, I just want to look at what's happening in the world of stablecoins, because a bit of an acquisition has happened with MasterCard and BVNK. Look, this is a company that they're buying for $1.8 billion to really ride into the infrastructure play of stablecoins. Remember, Coinbase were looking at that asset, and they decided to walk away when it cost them $2 billion. That were the reports, at least.
OK, coming up, Nvidia's GTC used to be just a developers conference. Now it's something for the prediction markets. Just a bit of fun there. We'll get the stock market reacts next. This is Bloomberg. Welcome back to Bloomberg Tech. One of the other stories out this morning is Qualcomm buying back another $20 billion of shares, also boosting its dividend from 89 cents to 92 cents. The story is pretty simple, as Qualcomm tells it. They want to bolster shareholder returns while also continuing to try and diversify this business from smartphone to things like automotive and increasingly and more recently data center. That's what the CEO, Cristiano Amon, is talking about in the statement. Stock up 2%. And then another check on Nvidia. We're now modestly lower, 0.4%. The peak of Monday's session during Jensen Huang's keynote was a gain of 5%, which very quickly faded as the market interpreted the 2025 to 2027 outlook or forecast of $1 trillion of demand for its AI compute. We're now down 0.5 percentage point, Kara.
Yeah, and 2.5 hours of speeching, it would feel. Jensen Huang didn't actually only just forecast that $1 trillion, of course, Ed. He also talked about what the company will need to get there, including more copper and optics capacity. Look, those comments really rattled shares of companies that make data center optical components. Let's talk about it with Bloomberg's Carmen Reinecke. Look, we're off by 1.5% on Corning and some other suppliers at the moment, but what's been interesting is Lumentum and Coherent. They've been running up into this announcement on the anticipation that we're all in on optics, and it looks as though there's a double-barreled strategy here.
Yeah, totally. And it's so interesting because we see those run-ups and then we just have one little comment from Jensen Huang and it just, unraveled right away. So, yeah, I mean, what he said was basically that copper is still going to be, or is going to remain important in these data center buildouts, which just, I guess, made some of the investors a little bit concerned about all of these, optics
components. The thing that's interesting, a lot of analysts did say this morning in some notes following GTC that, both are definitely going to remain important in these build-outs going forward. So there's probably not huge cause for concern here. And we did see some of those stocks recovered today. I think Lumentum did kind of go back up and so is in positive territory now.
Carmen, what's the experience of a GTC like for the equities team? Every single time on stage, there was a name check of any given company, you'd notice a little tick higher in some of those stocks. Which were the ones of substance and which were just literally name checks?
Yeah, I mean, it ends up being such a flurry of excitement as we're all rushing to, send headlines and watch these shares move. I mean, we did see some things, move quite materially, outside of Lumentum, Coherent. We saw shares of Uber and Lyft jump on partnerships that were announced. IBM shares also jumped. And then there were some other little smaller ones where things quickly faded. I mean, one that was actually kind of interesting is Nvidia itself had a very big spike, around that 1 trillion figure, and then actually paired most of those gains sort of as the market digested it. But yeah, overall, we really are seeing, again, that, Jensen's comments have the ability to move markets, to move these stocks. And it actually is a little bit of a flip from last year. We didn't see a ton of movement around GTC. Investors were really sort of concerned about the macro and, had a lot of AI skepticism. So seeing a little bit of a trend kind of maybe back towards normal this year where, they have the power to move stocks of other companies.
Bloomberg's Carmen Reinecke, thank you very much. Let's stick with what's going on in broader markets today, particularly for tech, and bringing in Carol Schleif, Chief Market Strategist at BMO Wealth Management. And on a very serious note, like with everything going on, the war in Iran, considerations around trade, a number of headlines relating to trade this morning, even a decline of 0.4% for Nvidia, it's the second biggest points drag at the index level for the NASDAQ 100, Carol. How closely were you watching GTC of the last 24 hours for some macro level impact?
I think not necessarily a macro level impact, and it's really important to zoom out from what's going on these day-to-day bases and try to think intermediate, longer term. Clearly, markets are trying to get beyond that, and I think it's one of the reasons why you've seen the aggregate indexes hold in so tightly. Because realistically, given all the news we've had since basically the first weekend before January 4th, we've had several different wars, conflicts started in here, lots of stuff that have hit the markets, and yet the aggregate averages are still hugging that close to all-time highs, even though there's been a lot of turbulence underneath. But I think that's indicative of the fact that people are really leaning into, you've still got growth stories going on. You had GTC reaffirm that growth story. I mean, $1 trillion, if you will, out over the next couple of years. And so you've got a lot of momentum underneath, and investors don't want to be out of the market when some of that macro clears.
I find that interesting. As Jensen Huang tells it, the global economy is in the early phase of a transition spanning agentic AI through to robotics and the physical AI space. If you've studied classic economics, how does one prepare for that as an investor to understand where in that transition the global economy is?
Well, I think one of the things you do is understand we are in the middle of a transition. They tend to be really muddy when you're in the very short term or the new phases of a technology. I was rolling it back thinking to when we first got Excel and WordPerfect and some of the other early software, and everyone was trying to figure out, how do I use it? Do I have to put everything into a spreadsheet or just some things into a spreadsheet? And when you have that sort of reconfiguration, if you will, it takes some period of time to figure out what the impacts are. But rolling it back and looking at company after company, country after country, reinvesting or investing for the first time in a long time in some of those really important infrastructure and capital investments. And that has long life and long tail to it, if you will. But it's also important to remember from Economics 101 that a lot of the economic stats we have were meant to measure a very different society than we have now or are emerging to. And so that'll be part of the challenge. So as investors, I think part of it is stay diversified, stay long, lean into it, and don't get too, don't hyperventilate too much about day-to-day activity.
Should you be leaning more into the compute build-out, the AI infrastructure build-out? That's what's worked for the last few years. And I'm looking at Nebius today, for example. It's selling, well, convertible debt to be able to continue to build out its own neo-cloud offering. We know it's got to deal with Meta. Should you be long that space?
Well, I think a piece of it is to understand not only the build-out, but to look far and wide for those companies that are leaning into using the new technology as well, because there's lots of different applications, different places that it has the chance to supplement, if you will, not necessarily replace everybody, but supplement. And so where are those leaders that are encouraging and their employees, if you will, and prepping their employees to be able to lean in and use those new technologies?
I mean, look, Carol, they've got to lean in, because many of them are going to be forced out. Look, there's another headline in your space of banking, Nordea, which is a Nordic bank, saying they're going to be laying off some 5% of staff because of AI productivity. Now, you can call it AI washing, but when someone like Jack Dorsey is laying off 40% of staff and he's thinking he can do that because of AI, are we just going to see more and more of that impacting the labor force?
I think it's interesting because I do think there's a hint, if you will, of AI washing to some of it. But there's also the issue that these leaders are looking for people in their organizations and they're giving them seats at the table, the ones that are rolling up their sleeves, getting messy, trying this stuff out and figuring it out. But also there was a report out recently that talked about the bulk of the spending being done in AI is done on the technology, not on teaching people how to use it. Yeah. So there's a piece of it where we have to create an environment where it's okay for people to experiment with it. We're not going to replace overnight some of these macro systems, and especially in highly regulated industries like banking, it's hard to believe that you're necessarily going to totally displace an old software and allow agentic AI to take over all of it. But it is going to supplement what each of us are doing and how we're doing it. And you go back and look just in my business, in analysis, where we started with hand-plotted charts and hand-calculated moving averages to deploying new technology all the way along, makes me a lot more productive day to day. And I think that's what companies are looking for. But each of us individually is going to have to figure out how to lean into that too.
Well said. Carol Schleif, Chief Market Strategist at BMO Wealth Management. We always appreciate your time. Let's talk about that disruption a little bit more now for labor, because China, it faces a key test as the nation's AI boom really reshapes industries while putting millions of jobs at risk. Now, analysts warn that up to 142 million urban jobs could vanish by 2049 due to rapid AI-driven automation. China correspondent Min Lao reports from Beijing.
这是真人还是人工智能？你能分辨出区别吗？
That almost looks like me, but it's not. It's an AI-generated video based on a single screenshot.
Tools from Alibaba, Tencent, Kuaishou are making AI video generation accessible to millions, sometimes for free.
Our company, I can't imagine without AI, how can we survive at the beginning? Without AI, I don't think our game can actually be done in 1 year.
It's brought huge productivity gains for this game developer, but also raised alarms in the entertainment industry. Disney and Paramount have accused ByteDance of IP infringement after its video generator produced near cinematic scenes from just a text prompt. The fear is that AI could replace not just mundane tasks, but jobs across creative industries.
The painting, if we use like labor works, it's like 2,000 to 4,000 for one piece. But with AI, we only use like probably 2 RMB for one piece.
For policymakers, the challenge is balancing growth.
We will nurture emerging industries and industries of the future
With disruption.
The rapid development of AI is having a profound impact on employment.
The China Economic Journal projects that more than 30% of urban jobs in China could be lost to AI by 2049. That's 142 million jobs. That's a scenario that could threaten social stability. Beijing is aiming to create another 12 million jobs this year, with just as many graduates set to enter an already slack labor market.
In finance and IT, if there weren't for this kind of regulatory barriers, about 30 to 40% of the job could have been lost right away. If you're thinking about the automation AI replacement of junior roles is already happening massively in China.
That leaves Xi Jinping's government with a dilemma. China can't afford to fall behind in its tech race with the United States, but the implications of a tech revolution are far from clear.
If we let AI replace the jobs without taxing the AI appropriately, then it can really get to the core of the consumer economy, and we got to think about sort of tax policy that is targeted specifically at what is driving those job losses.
It will be in the regulatory framework at some point. I just don't see it as a choice yet, because we're at the very early stage of promoting the application of AI. So the gray area must be capped, actually by a very wide margin.
Last December, state media published a landmark arbitration case in Beijing that set some early guardrails. Dismissing an employee because of AI is illegal because it's a business decision for profit, not an uncontrollable event. That means companies must prioritize retraining and reassignment before dismissing an employee. But for now, all signs at the two sessions suggest the government is going all in on tech at the risk of leaving some people behind.
That was Bloomberg's Min Lau. Coming up, Gecko Robotics makes a deal with the US Navy to monitor and maintain its warships. We speak with CEO Jake Lucerian. That's next. This is Bloomberg Tech.
The US government, well, it's stepping up its use of AI to monitor aging infrastructure and modernize military systems. In a new push, Gecko Robotics has announced a $71 million partnership with the US Navy, deploying its AI-powered robots to assess the condition, the readiness of American warships. Joining us now, Jake Lucerian, is Gecko Robotics CEO and co-founder. Jake, can you measure what your robots are able to achieve in terms of real-term military readiness?
We're all about measuring the real information and details on the ground. And so we swarm our robots all over these ships, as you see in the videos. And what they're doing is they're gathering ground truth and information that would typically take 3 or 4 months to be done and gather 1/1,000,000th of the amount of information and data set that is not filtered to any source of truth and software that could be, gathered and then in perpetuity be evaluated to help with planning into the future. What we're providing to the Navy, and kudos to the Navy for adopting this technology, in a way that's giving them an advantage over others that deal with the same problem every single day. They're taking very seriously this demand of getting to 80% readiness of their fleet, and the robots collect all this information and data that can help perpetuate goodness both now, saving them 3 to 4 months of cycle time in maintenance cycles, but also into the future to plan smarter so that we have less and less days of downtime for the vessels.
I mean, you're seeing them flying, we're seeing them climbing, we're seeing the hardware, but you're also about the interpretation of the data as well. How are you developing your own models to ensure that the right information is getting to the end user?
Yeah, well, it's this example, and when we say at the company a lot, is if it's not ready, it doesn't count. And that's very important as it relates to the readiness of our fleets, as it relates to deterring conflict, what's going on right now in the Middle East, and then also on the Pacific side. And, we've been doing this for 13 years. I started the company out of a college dorm with this idea of what if you could diagnose the health of the built world, what could that enable as it relates to predicting what the future structures, how they should be built, and then what's going to occur and how to prevent that from occurring. And so we've been improving these models and believing that if you can gather information and data using robots, turn atoms into bits, you can have such an incredible advantage as it relates to how to make infrastructure smarter, make it more efficiently, and make even new structures. And so these models are all being fed into a central source of truth, a digital thread for critical infrastructure called Cantilever.
Jake, you presented basically at the Winning the AI Race Summit in DC last year, which was very much focused on this administration's policy platforms for AI. I'm curious, in the time that since passed, you've done a deal with the Navy, you got it done, and I wondered what that's like, to see a project through to fruition with some of the military apparatus of this nation.
It is so exciting and so incredible to see the Navy being a leader in the world as it relates to giving our warfighters an advantage that no other Navy around the world, including China, has. And that's the ability to have this incredible advantage with robotics and AI to speed up how quickly we're gathering information and then deploying it. We're not just doing that, for the U.S. government. We're doing that for the largest companies in the world, companies like ADNOC, who's giving this AI and robotics native approach in such an incredibly advanced way. We're bringing that same technology and beyond to the Navy, and ensuring as well that it's not just about talk about 5 years or 10 years where you're going to see autonomous systems and robots and AI affecting the Navy and helping our warfighters. No, this is actually happening today. And that is something that the administration cares deeply about. That's something that Secretary Phelan of the Navy cares deeply about. If you want to have the best Navy in the world, the best assets and programs in the world, most robust, you need impact today. And as you're seeing, today matters, and it matters more than ever.
Right. Jake, what is your core competence at Gecko Robotics? Are you good at hardware or are you good at software?
We're good at building robotic systems that go out and gather information and data sets that no one, one, knew how to ever capture before, but then two, interpreting it to allow for decisions to be made to give you advantages that can speed up times to bring critical infrastructure that's constantly delayed, constantly over budget because of how hard it is to find out where are things broken, how to fix it. The robots are able to gather all the information, not have to destroy the infrastructure and assets to gather it, and then provide the ability to optimize where to make the repairs, the replacements, and then into the future how to plan for that to potentially never even have a shutdown. We've been able to prevent shutdowns at oil and gas facilities that were going to occur, that would have caused big explosions, and for the Navy to be able to accelerate and give them advantages in terms of how to get our ships out of dry dock and defending our values. And so we're just so incredibly proud to be serving the Navy in this way, and just kudos to the Navy for taking a big, bold step as it relates to giving us this advantage.
Jake Lucerian of Gecko Robotics, great to have you back on the show. Thank you very much. So coming up, we're going to get back to the big story of Nvidia's $1 trillion forecast. This is Bloomberg Tech.
President Trump currently speaking to the press as part of a bilateral meeting with the Prime Minister of Ireland. We want to take a listen in, as it is about geopolitics.
2 weeks, he was in charge of the killing of protesters. It's an evil group. I mean, they've killed much more than 32,000 people. And the man who was responsible for that was also killed yesterday. And all of the NATO allies agreed with us. But they don't want to, despite the fact that we help them so much, we have thousands of soldiers in different countries all over the world, and they don't want to help us, which is amazing. I mean, amazing. And I didn't do a full court press because I think if I did, they probably would be. But we don't need help. That war has been long prosecuted, as far as I'm concerned, almost from day one. We knocked out many of these things. We knocked out the Navy essentially in a couple of days. But I was surprised to see that NATO, while they agree that it was a very important thing to do, they agree fully. Nobody said, oh, you shouldn't do it. They would have had a nuclear weapon within 1 month of when we had the B-2 bombers bomb the nuclear potential. I call it the nuclear dust. So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine. Biden chose to spend hundreds of billions of dollars on Ukraine. And I guess the head of Germany just made a statement that, they weren't involved and they have nothing to do with the war. But at the same time, they think we did a great thing by knocking them out. Nobody wants to have Iran, or anybody, but nobody wants to have Iran with a nuclear, because these people are crazy. They're absolutely crazy, and they're vicious, violent. I mean, they killed, think of it. They killed, now I hear it's about 41,000 people. They put out a notice 2 days ago. Anybody that protests will be immediately shot and killed. That's pretty tough stuff. So everyone agrees with us, but they don't want to help. And we as the United States have to remember that, because we think it's pretty shocking.
President Macron has just said in the last hour that he will never join a task force in the Strait of Hormuz until hostilities finish. Yet yesterday you said...
Who said that? Who said?
President Macron of France. What's your reaction to that, sir?
Well, he'll be out of office very soon, so we'll have to see. I don't know.
President Trump, on Doonbeg, you're building an extension to it at the moment, but there's been an objection put in and it's being held back at the moment due to small snails. What are you disappointed about that?
Planning commission. I have not heard that. No.